Oh, it's already in progress? Oh, I
It
guess I
just
started. Oh, it just started. Okay, whatever. Hey guys, welcome to Coaching Call. You know the drill. I'm sharing a screen here. We're basically talking about, even though we're going to start out on a higher time frame, we're on a lower time frame, how it's important to stay positive, and that's what day trading teaches you. A lot of people associate day trading with some kind of shame, but that's because they always look at a they think of day trading as a smaller time frame affair where you're looking for some type of smaller time frame setup in a vacuum, when really it's all about top down, multiple time frame, higher weight, higher time frame, contextual reading of the market and planning it ahead of time. But when you have when we did our time frame analysis over 2.5 weeks ago, we shifted from a larger time frame bulls neutral bullish to basically when the false breakout was confirmed, we switched bearish. This is all confirmed with what I said, and I started shorting. I didn't just get everybody out of the portfolio around 95 when we reloaded around in the 80s, but I also started to short as a hedge for income producing trades. Now, keeping they never feel right because you always think like, oh, we're at the next support, we're at the next support. No, that's what an amateur thinks, and I've been in that situation where you think like, oh, just because you have a support zone here, it's going to hold. No, that's why the larger time frame bias category, right, which is based on multiple time frame analysis and bigger picture patterns, false breakout, shifted that. So you're basically giving more weight now to shorts in your daily calls because those weights are bearish, right? If you are going against a bearish larger time frame bias, you better have a really really good reason. And you can see we've just been just. I didn't just like see the trend now and call it. This is before it. I almost gave it before the false breakout happened. That's how in tune I am when I'm starting to trust myself, because really ultimately my system is about the max ability to accept discomfort, because even though I've written about it, I still find it very hard to fade the back of the zone, right? That's exactly, if I have the patience to fade the back of the zone, I would rarely even take a losing day. I'll go back to yesterday and I'll talk about that. Why, if I just originally waited for the back of the zone, that the original loss wouldn't have happened, and my 2 week short, 2.5 week or 3 week short only winning streak was broken with a loss trade, a long trade, because the larger time frame bias is still bearish. Now, just because it was at a zone, blah blah blah. Now, later on, there was a making maybe 3/4 of it back with this small move, but just getting involved on a day when you should not trade ruins your emotional capital to the point where I saw two trades today that would have made my entire month. Really, I mean, we're down today at 13.25%. I mean, that's assuming that you know, I did go all out here. Notice I didn't quad here. How good my instincts are, because the larger time frame bias was down and the intraday bias was down. So like once I got this is actually 1.5%. I know it seems like a nothing move, but that's how volatile Bitcoin is. You can see why I'm kind of. You got to focus on the good. Portfolio was exited a long time ago. That's all we got to. That's all we got to think about. This would be down like 35, 40%, or close to it. It was over 30 before it just broke below 65. So, but anyway, this was like 1.5%. But if I kept the emotional capital, I see there's an edge at 930, right? That's when I'm really good and active. But just wasn't really part of me, but just didn't feel like trading. So I almost just was more ambiguous about it. But if I was up around this time to make a daily call, we closed very heavy. There was sort of an engulfing pattern. We had no action, reaction. The ultimate contraindicator was bullish. I'm not going to say anything more about that. Those who know. And at the same time, right, there's an edge at 9:30. So when I woke, let's go to 9:30. We'll usually, obviously, when you're doing your contextual analysis, you want to give higher weights. You zoom out and then you zoom in, but we've already done that. So we're just giving you a little some of the action on the day. There's an edge at 9:30 because like there's a lot left on the day in terms of the ATR, right? Because right, so clearly, right at 9:30, right, we've had lower lows and lower highs. We have a downtrend day so far in the overnight, quite a bit. And the other markets, we're confirming it. We're talking more than 3%. And we know that one of the factors that leads to a trend days or an increase in trend days is a bearish larger time frame bias, aka time frame alignment. If you look at all those factors that increase the probability of a trend, one of them is time frame alignment. Well, we know the short and the intermediate term are bearish, right? And actually, if we zoom out on the larger time frame, right, we since about November 20th, right? We're talking this is a multi-month balance with a confirmed breakdown. Now I drew this box ahead of time, and those who know, when this was mostly up here because I'm using a beauty principle, right? We were in a sideways market, sideways and then up trend. Sideways, that sideways, sideways. It's inverted now, but it's still an inverted beauty principle. Those harmonies are done now because the leg count we called the inversion. We exited here, right? And even though there was enough momentum on the daily time frame where the breakout was actually predicted by the system, but also the inverse zero line reject on the weekly gets a higher weight, so that actually reversed it all the way down. We had a false breakout pattern. Like I said, there was a giant high volume node here, and then the context was different. But anyway, this is a down market, right? This is an up market, and then what happened next? We eventually started to go sideways and formed a balance. Well, we will go sideways to down and form a balance. And this is a down market. You're not just going to go down, right? You didn't just go up. You went up pretty good. This can go a little bit, I could zoom this up to here before it started to actually go sideways. But I kind of had the box do it, right? So it doesn't really matter. Um, yeah, so the box is kind of hitting it exactly. That's my target. My target for when I would start to get bullish again and from a like reload the portfolio is like we start balancing here for months, right? And this is support. We hold, go around it. We start to bottom build because it's not, first test you'll get in and out as a trade. But if you're position trading on a ledger, it's 2%, almost 1.9. You know what I mean? So be careful with that. It's more of a portfolio thing or like a position trade. You're not day trading it. Then if you want more leverage, you got to take risks. They're not going to seize your assets on an exchange because you don't own your coins. So, but basically, what I did is I cloned this, and that's what I'm envisioning next. Sort of a box that is going to have a range, right? And then around here, August, right? Now, that's just one example of it, but another example that we can use in the past that's worked. That's all we really have to predict something that we can't know for certain. We also talked about how this was a pure balance breakout confirmed, while this was a rising wedge bearish pattern, right? In the context of this downtrend pullback continuation with the death cross of these moving averages that have been inverted. We go here. This is a 50. So when the slow one gets above the fast one on any one, you can do 50, 21. A lot of people use 250. That one's a good one. You could do 200, 100. And just look at them from different time frames and just see if there's some past interesting behavior that could possibly repeat. This pattern hasn't happened in a long time. And when it did, there was a bear market. So like, why would I get super aggressive and take a chance? It's just silly. Like the unexpected thing that would have happened was that I was wrong and we got a breakout. The professional, even though it's painful, like, oh, I exited everybody. All these people that were greedy were riding. They quit. Maybe I'm an idiot. Like my system doesn't predict 100% what's going to happen. But there was a reason why I was just constantly showing these probabilities and talking about them through the system to filter out my ego. Because look at this, it fucking predicted it 100% bam in this scenario. Because those were the odds. It wasn't the fun thing to do, but it did. And now that's why this thing you don't give it too much weight. It kind of confirms it after the fact. I mean, now that this is inverted, it's confirming this, but it's like I'm not going to wait for it. And then you don't want to get blue car syndrome too, because for a while there was a bullish divergence. Well, now it's just confirming price. That's why there's a probability scale and like a weighted distribution across all these different factors. Because if you just find one thing like a kid and just get like in a candy store, you're going to get crushed eventually. Because anyone can get lucky over the short term, even contraindicators. Okay. But over the long run, it takes skill, dedication to see these patterns, and a lot of errors and mistakes and greed because doesn't feel right. For some reason, these are up more. The other thing too that's making me patient, this would break down and we go through it more like one leg down, up, two leg down, and we maybe balance a bit, is the fact that this time cycle has been pretty accurate. Where even around here, when we kind of retested up here on these highs at this shoulder, that's when we had the trend. I mean, this is predicted it very well. And I was talking about it ahead of time, and I even said I was going to sell up there. So there is something to this. But look at this double bottom up here, sideways for a length of time. When will it start to break out? Right here. Boom. I mean, this is great. And this was created before. I didn't just create this after the fact. Corby actually created this when he in November, this is when this time cycle was. If I go to a different exchange that has more data than Bybit, like Coinbase, you'll see more. But this was created a long time ago, and look how well it's worked. I mean, this alone is worth the membership if you really have the discipline to wait and reload on every single place. Or if you were making a triple or double top, you take profits. Like here, you wouldn't reload here for a couple of reasons. One, at this point in time, right, the RSI, which was bullish during the trend, has now flattened out. And then while you're still holding it, it's going up. While it's making a triple top, right? What happened? While it's making a triple top, the RSI crossed bearish. So that's definitely something, like you held to the ultimate here. You better be taking profits. A lot of things were signaling that you sell on strength. Okay, so what's the second best thing, right? Okay, well, let's say you got out somewhere as this was falling down, then you maybe reloaded in here, and then what are you going to do? Hold up here and try to get back out here to be perfect again? No, you have to look at the context. The context we were going to have is a rising wedge, false breakout under the death cross. There was a right here. Look at this inverse zero line reject momentum stall. The blue way over, CCI can't get over, turbo way over. Huge inverse zero line reject. It's a reversal setup. And even if you didn't do it on strength, right? The weekly close, there was a selling tail. And this was a false breakup because it went back into balance. You have a bigger picture pattern category. That's a false breakout. That's bearish. You have a rising wedge before that happened that I called. You could have been using that to make it bearish for the bigger picture pattern. Time frame alignment, right? You can do multiple time frame alignment. That's going to shift. Like you were neutral to maybe up for a while because this was multiple months, and then as it broke out and then it became the false breakout pattern, that's when you shifted that category to down, and then you go short or get out, as this all happened here. And that rising wedge actually predicts that this would spill out of here. So now we're in a down phase, and we probably won't get an inflection where we start to bottom. Probably will bounce around sideways between these two zones for a while. And then maybe here it'll build enough of a balance where we can start to have somewhat of a recovery, right? And then maybe here 26, right? Because this would take us to May, right? This would take us to next year, right? But a good case scenario is that this takes this long to bottom, and then it starts to recover, balance is there, then up here, test, then we get a breakout. Then if you draw a trend line up here, that's the next target, right? So that's just realistically, it's not what everyone wants, but that's not what people are paying me to do here. This is paying me to follow the system 100% as best as I can in front of everybody and show you that it works. And notice that the system is a holistic, contextual, moving part system. It's dynamic, but it's also systematized. It's not just contextual. It's not just discretionary contextual analysis. I've systematized it in the sheets. I made it that you can use the original template that Kobe had, or you can use this one that I've added certain categories that work pretty good, like bigger picture patterns and multiple time frame analysis to determine that larger time frame bias category. And the other thing that you can add are real-time categories that aren't on the daily call, right? Like what are the other markets doing at the time you want to enter at long or short? What's the day like? Is it lower lows and lower highs? Is it like it was all day today? And then are the other and is it down an extreme amount where it's a downtrend day? Then you think about the stat that 90% of the time the downtrend days end in the last few hours of the day. So okay, I'm gonna flip. I knew to do this. I just didn't have the energy to. That's why I was posting the fib ratios inverted to hit the 32 point for the next one. There was also hitting the VWAP at 930. That's the other edge, right at 930. You have to ask yourself, as it's going up into the VWAP at 930, when I as I was about to take the dogs for the walk, I was like, oh, should I get in? I was like, I just needed like one little reason not to because I just wasn't up for it. I was like, slight little tail. I didn't get it perfectly into the VWAP. I'm like, it's only 400 points, but it's like, that's ridiculous. I should have just grabbed it. This was a huge opportunity cost, but then you just got to figure out, what did I do good today? Well, overall last month, 2 months been really good. Flip biases, portfolio off. And then there's going to be a lot of opportunities on the short side. So like the 931 was gone, but I quickly jujitsu the energy where I was like, I know there's going to be another one in the afternoon or around noon. Like that's what you have to do when you start to feel, like, oh, I missed an opportunity, son of a gun. You know what I mean? because you can start to get really frustrated. But then you have to trick yourself. You have to link the frustration that will come when you miss a move to, oh, good, I know there's going to be another move. That's why I do the NLP where I'm constantly thinking, oh, frustration's okay. There's going to be another move instead of I'm just going to, you know. Now, granted, I didn't personally take the other move, but I at least gave everyone kind of a hint a little bit. Let's take a look at that. I mean, I didn't even give it with. I only the moves that I take, I put arrows or I say I'm double top, double bottom. I'm taking a short or long. This was one where my system said to take it, but I just, emotional capital. I don't know. I just didn't feel like going putting on risk today. But the idea is that when you have a downtrend day and there's enough RR left on the day that's earlier enough in the day, like, if I tell you that 90% of the time, if it is going to be a downtrend day, and we know that when you have a bearish time frame alignment, that increases the odds of downtrends, or a bullish in a different case would be increases the frequency of an uptrend, that there's good odds based on everything I said about the time frame analysis, the bigger picture pattern that happened, and what the price action and volume we're doing, and the other markets, that there's good odds that because this is before noon, right, and it's up into the fib ratio, and see, if you just waited to the VWAP, you would not be taking into consideration the idea that this is a pure downtrend day where you can actually make the most amount of money. I'm having this conversation in my mind, and as a part of me is like, I just don't want to get in right now. You know what I mean? Like, I'm like, oh, pure downtrend days. I know they end in the last hour. This could have a huge move down. And part of me is like, well, shit, it went down 8%. Maybe I missed it. That was the one excuse that I took not to take it for the second entry, which was right here between the 38.2 and the point 0.5. Okay. That's why I posted that there in market snapshot, right? Now, obviously, I wasn't feeling really confident because I made sure people knew not to take it because if I write market snapshot, it's just a snapshot, but this is a setup. I'm not even saying this in hindsight. This is just like a mistake that I made that I didn't take it or whatever. But, and I've written about this in the channel where, like, in the afternoon session, there's good odds for a second leg down. This is a very high odds setup because there's other factors to the daily call that I add to this that I'll talk about right now, which is obviously the trade location, right? Or what today's bias is. That's not the larger time frame bias. The larger time frame bias is bearish, but guess what? Today's bias was extremely bearish too. And sustained momentum because it was between 9 and 12 and there was the afternoon session, and because we know 90% of the time they end in the last hour, the sustained momentum is likely going to be in your favor. That's why I didn't use a fade setup where I fade trade location, like put an order at 72,955 to 73,538, thinking we're going to fade the high of the day. Because if this is truly a downtrend day, why would it ever get up there again? That's why I posted the fib ratio there. Because you only use fib ratio setups, pullback continuation or PC setups on days when it's directional. On days when it's non-directional, which are most days, except right now, because we're in a different phase of the market. We are in a phase where we have time frame alignment to the downside. We shifted from a sideways to a balanced breakout. So you're going to increase the frequency of trend days. And you can see a lot of my setups when I posted that chart under bearish time frame alignment with the blue arrow shorts, we're actually pullback setups or even a couple of breakdown setups, because though you can take a few more of those because it's going to be directional. Because I'm asleep at this time. I mean, this isn't great trade location, but I mean, you're fading the high of the day with what? This is really nothing. But the idea is that once it trended down, right, before 9:30, what's the odds? And then the second move, right? So, but anyway, that's just basically what us as day traders that are doing income producing trades in conjunction with these higher position portfolio reloads, because we call the portfolio so well as day traders, we obviously just only shorted, right? Because we know we're very concerned about the larger time frame buys. Even though we're day traders, notice I'm always talking about what are they doing? What's the larger time frame? So that intraday bias was in alignment with the larger time frame buys. That's why you could get aggressive on the short side and take those momentum pullback continuation setups to the VWAP at 9:30 and the second one around noon into the fib ratios. Those are the two. Putting it at the high day, thinking we're going to test it after, but when there's this much momentum down, prior to it going double digits, it was around, it was still a lot. I mean, who would have known it would have gone this much? But all right, so we let's go to a really important chart that also gave us a heads up, and then we'll look at that chart through the ES. We'll look at the chart of the ES through this weekly. This one's really important too because of this CCI chart. But let's take a not the one I wanted, but here we go. Okay, so another one that helps is if we just kind of back test it. We don't even need to go that much farther out, but right, doesn't really get much past this meridian line after it made a double top when it moved far enough away from the mean, reverted into the mean, broke through the outer support, through the meridian line, and then built structure below it. And then the last test finally was the same pattern here. Beauty principle down. Now, the crazy thing is this is much more violent than this. This was down, sideways, down. I mean, this has already exceeded my boxes that I drew from the previous run. You can just see how violent this is. I mean, look at that. That is, I mean, just even in the time it takes. So, um, and notice that, like, once we did break through this thing turned red, and then this entire redness, right? It still doesn't even recover, right? Until here. Like, think about how much time that is. That's from May till, I mean, come on, right? So this hasn't even turned red yet to even show the downtrend. Isn't that scary? Like at this point in time, it at least show. I mean, I imagine it's gonna soon. Now let's look at this lens through the ES right now. That's terrifying. I drew that today for everybody. Okay, because I mean, if we just go back throughout time, yes, this is a totally manipulated market. It just goes up and up and up, but there's a lot of opportunity to be made if you have access to an ETF or you have a good relationship with your wealth manager and they don't mind taking your opinion because I know a lot of them don't really do things. Um, you know, they don't really manipulate it. But if you just look at this for a second, when we go too far away from this mean, we revert back to the mean and then we spend time below it. Now, a lot more green than red, but I mean, look how far we've moved away from it. Look how far we moved away from it. We at least go back to recover. Even here, to go back to recover. So it's not a bad idea to, de-risk when you've already made a lot of money. I mean, that's what we do. And it worked pretty well here, right? Not a good looking chart. It's just funny too that I had another contraindicator friend of mine that's right when he wants to buy back in or get bullish, he sends me something from Kathy Woods. This was like a couple weeks ago saying she thought the bottom was in. This is when it maybe dip below 87 or 88, between 85 and 90 again. People are like, hey, it'll bounce back past 95 when I told everyone to sell. And I was like, oh, that's a contraindicator. Okay, good. It's probably going to break down because I just remember every time he thinks to buy or he wants it just does the opposite. So he just kind of confirmed if I'm going one way and he wants to go the other, then he becomes the contraindicator to that, right? So it's always good to be risk averse because no one has a crystal ball, but I mean this is the scenario that I was imagining based on the probabilities, and the reward to risk just really wasn't worth it. I mean, even best case scenario we got up here. I mean, just look how much we've risked now. This could really go to the downside now. One thing, like I said, I drew in this other chart here is that this is from 2021. This high is from 2021 double top, and then we got this important pullback at 24. Let's just draw a zone here because there's a lot of this is important market structure. I would say a lot of people, that bought there would want to look at that area to buy again. Like a lot of big firms that bought there. If we do break that, I mean that's what's going to take us at least down to to take us into the 50 range or the high 40, mid 40s. If we can hold here, that would be good, right? But one of the things that kind of remember I said before, if we were confirmation traders, I said what would confirm a bear market is if we break this low, which is around 74.5, because then we'd be sort of in this head shoulder balance breakdown pattern, which is confirming we're not confirmation traders. We're more advanced. We actually got out here, anticipation of it, anticipatory trader, selling on strength when there was an inverse zero line reject. I mean, why would you want to hold through that? Boom. I've never, like I said before, I've never seen a stronger one in my life. I mean, what a great system. You know what I mean? Look at that. Tia Bell, nobody got it. Simple, combinatorial, probability, holistic system, smash down. So that's what we're dealing with here. Head, shoulder, shoulder, little mini shoulder there. And best case scenario is a sideways phase for a while. But why couldn't we go down and test down here easily? But they say it'll never happen again. The institutions will never let it get fat. This time it's different. No, that's just emotions talking. At some point, you have to say to yourself, why am I continuously, taking a sip from, the poison of the emotional body saying, hey, this is going to keep going up and up. At some point, or whatever the other one is, like it'll never reverse, even though it's time to buy. It's because this system will help filter out that through the counterintuitive holistic nature. That's why you should be filling out the entire thing and not just look at one thing. If you've filled out enough of those sheets enough of the times and have gone through them, and I still have it out sometimes, fill it out, then you could take a snapshot and get a holistic, thing. But until you do that, you have to fill it out every time because you're gonna see something like maybe something on the daily, but then ignore this weekly thing because you forgot to check the weekly. And that was the real, secret here. This weekly inverse zero line reject into this beauty principle meridian line where that predicted the bear market last time. Why the heck? That was a double top. Double top. We're done. We're done. And you can see this is panic sell. So yeah, this is a zone where I feel like there could be some active buyers, but just keep in mind if you're only looking at level and how much we're off, then you'll be having your capital tied up in your portfolio for time cycles. If you want to be more sophisticated about it, you wouldn't have a position right now that didn't have a shorter time frame horizon with a stop loss like a day trade. Because if you just want to start DCAing, you might have that tied up for months now. Like I said, best case scenario, based on how accurate this has been. Like I said, anything can happen. Maybe there's a COVID thing and it becomes a V, but that to me is the lowest probability event. The highest probability event is that we start to bottom out here, not reach up here by then, but like start to go sideways down and then build. And then by the end of this year, we might get some. You know what I mean? Where there's an inflection up here because this is a brutal. We've lost a lot of data since October. This has been one of the worst quarters ever in Bitcoin's history. So, but I mean, all these, all these big groups that are getting it. I mean, it makes sense. Like, why would they pump the market? They clearly want to take the Bitcoin from everybody, dump on everybody, and then, sell it back to institutions like the teachers unions and then retail get involved again. But we're in a bear market when you go to your maxi channels and they're like posting things about how no one's ever lost in 4 years. It's like, yeah, well, fuck it. Who wants to have their capital tied up for that long? And who knows it? I mean, you never know. I mean, like I said, what Kevin posted in the channel, and what's been released with the Epstein files, maybe Bitcoin has been the ultimate rug. The question is, like, I don't know if you guys, have a lot of your money tied up in Tether, but I mean, at least that's backed by something tangible like gold, I think, right? I mean, that could rug too, and all my hard work goes to zero. So, I mean, there's a lot of risks involved in this, right? It's not just whether you're right or wrong on an event. It's like, well, what if that black swan event happens and this whole thing has been co-opted by the Epstein, uh, you know, island boy mafia thing they had going, and it was a way to basically siphon all the money that they stole from everybody through printing it and a worthless dollar. I don't know. I don't want to speculate because the only thing that I know that like right when Kathy Woods was telling everyone the bottom was in, right when I was telling everyone to sell here, I went on AI and I asked AI how accurate Kathy Woods was. She's horribly inaccurate over short and medium term. She's just basically like a maxi that says it's going to get to $1 million by 2030 or something like that. It's like, well, I get it, but like, look what you just did to you just lost your clients over 30% in 2 weeks, 3 weeks, 1, 2, 3 weeks, maybe four up here. You know what I mean? Like about a month. So we're in a down market. We have tools and we have that holistic way of looking at it and the psychology to get in and out and to be flexible, not just with day trades, but with portfolio management as well. So we have the time down, right? If this starts to bottom at that zone that I had on the other chart and it gets around here, that could be a really good reload for the portfolio. Until that time begins, I think the hedge is to not expose your portfolio to cryptocurrency, Bitcoin and Ethereum at the moment as much as you can. I'm not, my Bitcoin and Ethereum are fully out and my SWI is fully out. But in terms of my Theta and all these ones that I'm staking from last run that are on all these different things, like I'm just leaving them for now. Like I don't give a shit if they survive this because of the projects and the partnerships with that shit. That's fine. That's like Dot takes months on stake. I mean, I have too many of these things based on the excitement of the last run to actively manage anything other than Bitcoin and Ethereum this week at this point. So maybe we'll have a massive recovery in a year or two on some of these projects. But I mean, I think what's going to happen is that let it all burn and then out of the fires, we'll be reborn again. I think whatever's left, it'll be more clarity. I mean, when we come back from this, most of these will be gone. I mean, already some of them are gone. For example, this one here, I've already contacted, and I'm in contact and put together a case for an attorney. Where is it? Yeah, let's not even go through there. I don't think about it. What I'm trying to say is that it's already happened. It's already begun. And if I'm the testament that's going to happen, they're not the only ones that might get a lawsuit going. Hopefully, you'll take the case. So, but I think eventually some of these will find the light of day, but the cycle is off, and maybe a lot of the ones you thought were going to do well don't do well. I mean, wow, 18 cents. Holy shit. This thing got to $16 at one point. Oh my God, I should have sold then. You said you weren't going to do it. Turn away on this shit. You got to focus on the good. Selling on your Bitcoin, Ethereum, taking only shorts. You can't look at other assets right now. Want to take a look at Bitcoin dominance in XRP? Yeah, for sure, for sure. Let's take a look at that. Wow, this is an absolute bloodbath. But this is what I was seeing. This is what I was seeing when I was throwing it through the lens of PPT with all the probabilities that we put together that holistic system. That is it. No psychic wizardry, nothing. It just tip the scale that this would happen, and then you look at the beauty principle. The charts kind of repeat themselves. All right, let's take a look at what two coins he said. Bitcoin Dom and XRP. Okay, Bitcoin. Yeah, I mean, in another universe, typically if this thing would hold and we started to have a real downtrend, then that would when money would actually flow into alts. But like that behavior of like Bitcoin takes a dive and then money flows into alts was a behavior of an investor group that was retail oriented and is not in the market right now. So it's like institutions don't even care. Um, but I mean, that would be great if that would happen. It seems like they're all going down together at this point. Yeah, but the idea behind this is that, is the dominance of Bitcoin is a market percentage of the entire crypto cap goes down, that means that there's going to be more money flooding into altcoins. You would use support and resistance and your daily call and all the other things we look at just like this. And, this is also near a fib ratio here, right? Where also multiple leg counts. And then, obviously there's key zones here where this would be higher odds scenario if we got a strong reaction down there. Yeah, USDT. It's useful, but it's sort of just if you trust your Bitcoin reading, then you wouldn't really, right? Like look at USDT. Everyone's going into USDT because I had this as the zone, but remember when you if you break a zone, that's why I stopped looking at this chart because I was like, it's this is the I
I'm not
said
sure, Mateo. I don't know, people. I don't know if you can see, but I'm not seeing a screen. Maybe it's just me. Oh wait, no, never mind. I'm sorry. I can see it. Apologies.
so one of the reasons I wasn't as this was acting as resistance, but then I stopped posting it is that not only was Bitcoin giving signs that it was going to break down, so this is becoming more useless, but also the way like notice that every time it came up here in the past as this was maturing, there was a selling tail. But this time it barely reacted down, so it was building a sideways structure. That actually is the type of market structure that leads to a breakout, not a reversal down. On top of the fact that it's very mature, so if it did break out, it would be a contextually aligned balanced breakout setup. So that'd be really bad for Bitcoin. I think I mentioned that at one point. So I was like, I'm like, oh, I don't like how it's just bouncing and bouncing along the trend. It's still intact. That's scary as hell. So yeah, wow, interesting chart. I'm glad you made me look at that because that's cool looking. That's the only green. You're probably thinking, what was that one? There's the only one. Wow. Oh my God. Good Lord. Good Lord. That's a lot of money. Oh my God. The dirt prices, right? I mean, if you're a DCA guy, but time wise, it'll be back and forth. You're not gonna probably if you're DCAing mindset, you're not gonna like be happy with the bounce, right? So then it'll just go back below break even again. You'll just be in a sideways market, right? So that's because we can think in time cycles, we're gonna be a little bit patient here. We're not gonna catch a falling knife or anything like this. I mean, we're in a downtrend market. And one of the things though is that usually what is a sort of a sign of temporary exhaustion is when you have the largest candle at the end of a move, usually. But keep in mind, we just broke this balance, right? But that's why I originally had this drawn around this height because that's when this started to go sideways. But we had like a month of sideways action, so that's what could happen here. We go sideways here, and then we see how it went sideways, and then broke up, and then went sideways again. We could go sideways here and break down, hit the zone, go sideways for a long ass time, and then get a mature balance and break out. Like that's pretty long. I mean, is that maybe not as high? It could be a narrower one, something like this. Yeah, but yeah, it still takes us like just looking at how long these balance just on average, just taking that one on the left, like they take a while to actually shift into a different phase of the market. Um, so but yeah, it's taken a lot of focus and energy to be able to get into that flow state, to be able to filter the probabilities of the system, to be able to call it like this. It's you can see how it could be emotionally exhausting. And I'm putting on a lot of size and a lot of positions. It's a lot of work. Like today's one of those days where like the system was so awesome where it said what to do, but I just couldn't emotionally do it. That's why I was posting the charts. But I don't know. I mean, there might be a way to maybe automate some of this where it's just like if the system could see what I saw and I could just go outside, it could just take it for me if I tell it what to do, kind of a thing. But I don't know. Execution's a tricky thing. I don't know if I would trust something like that, but it'd be something I'd want to look into if it could be automated something in a certain way. But yeah, I mean that's where we are in the market, guys. This is where we are. If you haven't gotten out of your portfolio or you just I don't know, if it's just alts, if you just want to sit through the fire, you don't care because it's such a small thing now. I understand in certain micro caps. If you took the signal to get out anywhere, even in September, that would be great, or even at the recent highs. But you could, sidelining is a position, and like I said, there are opportunities. If you're comfortable taking long trades, it's very easy to just shift from spot to futures, where it's even slightly cheaper on the long side, and then just make your trades on the short side. I say that now from complete comfortability, but it took me almost like maybe 8 years to 7 where I felt comfortable shorting. I don't know. There was something about shorting that just used to freak me out, just for me, just emotionally, like in terms of the stress of it. So now, I mean, if you think about it, they just work out so much faster. It's if you can just understand how the bias can shift, you can be on the right side of the market, and then the short trades work out even faster than the long ones. Unfortunately, because fear is stronger than greed, and markets tend to fall faster than they rise. But this you could also take this as I'm going to exercise great patience and opportunity because I know there's going to be another opportunity cycle. So we're going to take a look at XRP real quick. Yeah, if you can stay positive, this is going to be one of the greatest opportunities ever. If you still believe in Bitcoin, that these institutions are going to pump it again. I mean, you want to be patient, use the skills you're learning here to use the time cycles, start to reload. Maybe when you see start bottom building, maybe around that May time cycle chart on weekly or something that's mature enough. Maybe you don't have to be perfect with it, but if you're not trading it, you just want to get a position to hold for a while to whatever the dollar cost average into it. Not that I like to mix systems, but I mean that's when I give a portfolio read note signal, that would be what I would give a better turning point for. But I mean, just look at the relative volume today. What a trend day! Wow. Of course, that's going to be super high, confirming the trend. Now, somebody wanted to look at XRP. Let's see here, XRP. It's XPR. It's XRP. Glad I got out of this coin. Holy shit! Hang on a second. Woo! Woo! Hoo, 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 hoo. Got out just in time and pulled into cash. Whew. Okay. Um, Ripple. Yeah, I mean, uh, like I said, any position that you'd want to build, like even for a trade, if you wanted to trade even counter directional at this point, you'd have to wait for a pause date, which is like a tiny doji, and then we might have some responsive buyers. But just keep in mind the time frames are down. It's not this thing's going to make a V and go up. Anytime it goes up into bearish time frame alignment resistance, you're going to have active sellers. You're going to sell at break even for a while. So we stood that. That's how that sideways channel forms for months and months and months and months and months. That would be the next cycle. But who's to say we're even? But this is this. Who's to say the downtrend's over? Who's to say we're out of the down phase yet? I mean, let's go on the daily real quick. So pretty much everything's going with Bitcoin at this point. There's no divergence yet. So I like the fact that just going back to that Ripple chart in my mind. I mean, it's more of a double bottom. This is clearly broken it. So I mean, it's sort of like relatively strong, just from a pattern perspective. But to Bitcoin, but since everything's following Bitcoin, you might as well just follow Bitcoin for now. I mean, who's to say this down phase is over? I don't think it is. I'm saying like pause day relief, maybe a day or two of green. Like that's when but I think this thing's like if you just think about it from like this was the time you should got out. When you saw this up here, that's when I got out of some. Not nearly enough, and I made a huge mistake. I only got out enough to pay the bills. I was like, whatever. But look, but the system triple top, I can go on all the reasons why we did a whole lesson on that just to get into the mindset to do that. You just got to improve and especially right when then you saw this bearish engulfing packet took out all this data. That was the other thing when the time frame alignments confirmed the shift down. That any pop up into previous resistance was going to bring you to the blows of balance, and we were in popping up into here, bearish wedge, down again. So we have one leg down. That's why I wanted to do this. Sorry, two leg down. I want to do leg count, and then three leg down. And then we go sideways, and then we get four, maybe even five. Right, 5 to 6 is when it starts to get reversed. I mean, you know, the three legs down is like you're sideways, and then you're going to be could easily go down to a fourth leg to fifth leg count. So I mean that's kind of where we are right now. Do you guys have any questions right now? Open the floor for a minute.
None for me. Where can I get $70 an ounce silver? Like it's 70 now.
Just I think it was over 100 not too long ago. But I'm glad I told people to sell it. If you guys take a look at that educational note, I posted all the reasons why the silver was gonna you know, be careful with this. Like I know it's just because it pulls back, you think oh, we had a great pullback. No, that's like saying this is what I said about silver. Like it's like saying that you should buy a pullback here because we had a nice pullback in Bitcoin. Like no, the trend's over now. Look how many leg counts were up. I mean, and that's abnormal, right? And then boom, boom, boom. Really correct behavior is you sell on strength right here, right? That's what you have to do. That's not even in hindsight. We just know to do this. We sold on strength here, same thing. And like I said, top-down approach system went through everything systematically, predicted it. But like I said, still possibly another leg down, not out of the down phase. But then once we do get out of the down phase, we'll go through a time cycle of a sideways market, and that's when a mature balance will form, and then we'll go into an up phase. But that might not start happening till September. Best case scenario would be, I think, May, based on the Bitcoin time cycle, which has been very, very accurate for years now. That's when it says this thing would bottom out, which is still months away. So sidelining is the best bet at this point, guys, I think. So yeah, I mean, I might be making another video update maybe sooner than just maybe making a coaching call, just because the market people get a little crazy. They lose hope and they don't think there's another way we can make money with short hedges. So there's other ways to do things. And just remember, sidelining is a position. And yeah, that's it,
So
guys. So I guess. Oh, do you have a question?
yeah, I think I was a bit late in the call, but I think you went over SPX, Nesma? No, really? You did already SPX. I'm sorry, mixing French and English. There are some other stocks that. Oops, sorry. You hear me?
Yeah, can you go?
Yeah, so SPX is on divergency, on various divergency, and some other important stocks of the SPX are already with a head and shoulders pattern. So I guess the market and both SPX and BTC are most of the times linked to each other. I mean, if the market goes in one side, the other side as well kind of expresses the same
Well, I mean,
behavior.
the only thing I'll say is that the best thing I can say to do is like anytime you have a question, it's like, well, basically, go through. Do you have your daily call sheet out when you going through your ideas?
You're right.
So
Absolutely. That's
I
the
think so.
that and
I think sometimes the mistake that people make when they start to get the system is they go through it, enough of the time where they can see certain things of it. So, but then they don't have it in front of them where they're really filling it out. So what they do is they'll see one aspect of it that catches their eye, and maybe that becomes like a confirmation bias or a fixation. And that's that's why anyone can fall for that. That's why it's super important, I think, to go through every single step. Um, because if you let's say you're only looking at one thing on a daily chart, you might see a zero line reject, which says we're going to go up a little bit, but then you didn't check the weekly, which has a huge inverse zero line reject, which suggests that anytime we get into resistance or even have a breakout, it's going to reverse because it's way bigger, it's more pronounced, and it's on a higher time frame than the daily. But let's just say you didn't have your daily call sheet open, you might have like not checked the weekly or the monthly for like a week or two. I've done that. And you just make a mistake. So it's like you got to have things open. You got to use every single edge you can get.
so the you evaluate the hierarchy of things in. I mean, I think as you mentioned, the you put up a screenshot of your calculation, your matrix, your daily call matrix, and yeah, I noticed that there were some new categories. And uh, how can you attach a weight of each category to kind of like compile the data and say, okay, it's one or the other or the other?
Well, like if
How
you
how
made a
can
sideways call today or something like that, and then you went into the market around 9:30, and you're like, well, wow, I made a sideways call, but we're down like 5%, and we've made lower lows all morning, right? Then the intraday buys and sustained momentum would be against any type of long because your sideways call says you can go long, right? And then if you add a larger time frame bias category to it, that's always been down, so that's against it too. So then it's like 3 stars against 1 star, which would be trade location, and then it says you can't take it. That's one way to do a quick snapshot of it. Let me see what that was me on gold, basically. Yeah, I mean, the thing is, guys, like I've known about the correct thing to do with this system for years. Like it's so when you're really trading an account where you're 6 figures and up, where your blood boils, and I say, okay, on days when there's a lot of things against you, like I had a voice in my head that was running the system when I took the first long that I took yesterday and over like 3 weeks. And it was basically like, or even longer than that, because I didn't trade for a while. So if you just look at the arrows, but
I think I influenced you a little bit
to do
for
what?
that long because I was like the on Sunday the bounce was it was on I was no it was on Tuesday there was a
Mm,
bounce that it was like and then I was like okay maybe this is it.
no, not really. I mean, I went long because it was exhausted a little bit, but I mean, it's the larger time frame bias is still there. It's just it was a learning lesson. I kind of I noticed that basically a lot of the longs that I was giving you or I was giving a lot of bearish signals for the last 3 weeks, and then you come in with a long idea. So I was kind of used to that anyway. So that's okay. It's normal to actually not be able to. You always feel it's the opposite thing to what the system wants to do if you don't run the system over. Okay, so yeah, obviously today, right? You wouldn't want to go long, especially if you came in. So that's how you could have certain things override it, but don't. It has to be obvious and extreme. You don't. You can't just always override your call because the call's there in place to help you do things you wouldn't want to do. So, but that is it for today, guys. Yeah, just keep your heads up if you're just trading. You obviously want to be either not going long or focusing on the downside. And then we just got to be patient, which could be weeks, months, even maybe longer, to reload again. And the opportunities will probably be pretty awesome because I don't think all these institutions got in for anything. But that doesn't mean you just got to sit through this like crazy thing. Well, look who's in it. This guy's in it. This guy's in it. Meanwhile, your portfolio is going down 10, 20, 30, 35% in 2 weeks. That's not what, has it really been 2 weeks? When was this? January 14th? Oh, wow. Yeah, 2.5. Okay. Well, hey, system's on it. All right, guys. We'll see you on the next one.
Thanks,
Adios.
Mateo.
Yep. Take care,
Thank
guys.
you. Bye. Bye.
Yep. Bye bye.